You are watching Market Watch, the brief overview of the key events from the world of finance. Asian markets moved cautiously on Thursday as investors held their breath ahead of the U.S. jobs report, which could determine the direction of the Federal Reserve's monetary policy. A gain of 110,000 jobs in June and a rise in the unemployment rate to 4.3% are expected. Private sector data raised concerns, showing the first employment decline in over 2 years. If the official numbers confirm labor market weakness, expectations for a July rate cut could rise sharply, triggering a rally in Treasuries and weakening the dollar. 10-year yields have already slipped to 4.265%, while 2-year notes fell to 3.77%. Amid Trump's criticism and pressure on the Fed chair, markets remain on edge and sensitive to data deviations. Despite Trump's announcement of a trade deal with Vietnam, sentiment across Asia remains cautious. New U.S. tariffs, 20% on Vietnamese imports and 40% on Chinese goods rerouted through Vietnam, have sparked concern. Meanwhile, a massive tax and spending bill is advancing in Congress, proposing a $5 trillion increase to the U.S. debt ceiling. This move has rattled currency and bond markets, as the bill is expected to expand the budget deficit by at least $3.3 trillion. While doubts remain over the bill's effectiveness, markets are beginning to price in possible outcomes, including increased demand for safe haven assets. Bank of Japan board member Hajime Takada has called for a resumption of rate hikes following a temporary pause. Despite uncertainty around U.S. tariff policy, Takada believes Japan's economy is more resilient than in the 1990s and can withstand external shocks. The Bank of Japan should remain flexible, avoiding yen overstrength if the Fed eases, and keeping pace with normalization if the Fed tightens. Strong corporate profits, labor shortages, and rising wages support the path toward the 2% inflation target. According to Takada, Japan is emerging from long-term stagnation and entering a true dawn, sustainable growth with moderate inflation. Institutional demand for digital assets continues to climb. BlackRock's Bitcoin ETF has for the first time surpassed the firm's flagship S&P 500 ETF in annual fee revenue. This reflects growing confidence in crypto as a hedge against U.S. fiscal and debt risks. Bitcoin is increasingly seen as a strategic asset, especially amid expectations of dollar depreciation and a dovish shift in Fed policy. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.